Welcome, curious minds, to another deep dive. Today we're embarking on a fascinating journey. We're looking into the technical signals around a specific stock, DVA. And forget this idea that stock charts are just, squiggly lines. They're not. They're actually dynamic storytellers.
Absolutely. They tell you a lot if you know how to read them.
Exactly. They whisper secrets, reveal underlying shifts, offer clues about maybe what's coming next.
Yeah.
So our mission today is to really try and decode one of those stories, see what DVA's chart is trying to tell us.
Yeah, that's a great way to frame it. We're going to examine DVA stock through the lens of technical analysis, specifically looking at patterns, indicators, across different time frames.
Right.
We'll start big with the monthly view, get that long-term context, then we'll zoom in to the weekly perspective, layer on more insights. It's all about understanding potential movements.
Okay, let's unpack this then. Starting with that biggest picture you mentioned, the monthly chart. When you look at DVA stock over that longer period, what jumps out is, well, it's consistency, right? It's been trading pretty diligently within what analysts call an ascending channel pattern.
Right. That's pretty clear visual.
And that just means basically the stock's been making higher highs and higher lows.
Yeah.
It creates this upward slope on the chart.
Like steps going up.
Exactly, like a car driving steadily uphill, staying between the lines. Right now, the price is around $127. So just looking at that price action, it suggests a steady, positive climb.
Seems okay, right?
On the surface, yes. But what's fascinating here, and this is key, while that price action in the channel looks positive, there's a subtle but really important warning signal bubbling underneath.
Oh, what's that?
On that same monthly chart, the Relative Strength Index, the RSI, it's showing something called a bearish divergence.
Okay, RSI, that's a momentum thing, right?
Exactly. It measures the speed and change of price moves, kind of the strength behind the trend. Think of it like, engine power.
Gotcha. So bearish divergence. That's when the stock's price makes higher highs. It keeps pushing up. But the RSI, the momentum, is actually making lower highs.
Ah, okay. So the price is going up, but with less and less behind it.
Precisely. The upward move is happening with decreasing strength. The engine's sort of struggling. Even if the car's still inching uphill, it flags a potential shift, a loss of power that could lead to a change in direction later. It's a classic heads up.
So what does this really mean for us looking at DVA? This divergence, it's not just noise.
I wouldn't call it noise, no. It's a prime example of why just looking at price isn't enough. It's a subtle, but significant warning. Suggests an underlying weakness, maybe not obvious at first glance.
Like the chart whispering, hey, maybe things aren't quite as strong as they look.
Exactly. It sets a cautious tone, makes you look closer, especially when you zoom in.
And are these kinds of whispers usually reliable? Or sometimes just false alarms?
That's a fair question. Nothing's 100% in markets, right?
Yeah.
But bearish divergence on a monthly chart, that carries more weight. It often precedes a bigger correction or even a reversal. It's like an early warning tremor. Doesn't guarantee the earthquake, but you definitely pay attention.
Right, makes sense. You look for more clues.
Exactly. You look for confirmation on shorter time frames, which conveniently is what we'll do next.
Okay, so let's transition. Let's zoom into that weekly chart. This usually gives us a more, immediate feel for things, right? What's happening now or very soon. And here's where it gets really interesting, picking up on those whispers. Back in January 2025, something key happened. The DVA stock price, it got rejected. Hard.
Yeah, I remember that. From the upper line of that ascending channel we were just talking about, around, $178?
Exactly, around $178. It hit that ceiling and just bounced right off, started turning lower. So what did that rejection really signify?
Well, that rejection was pivotal. When a stock hits strong resistance like that, the upper boundary of a long-term channel, and fails, it often means the buyers just ran out of steam at that level. And this specific rejection, it led directly to the formation of a really classic, very well-known reversal pattern on this weekly chart. A head and shoulders pattern.
Ah, the head and shoulders. I've heard of that one. Can you quickly visualize it for us?
Sure. Imagine three peaks. A central peak, that's the head, which is the highest point, and it's flanked by two slightly lower peaks. Those are the shoulders.
Okay, got it. Head in the middle, lower shoulders on the sides.
Exactly. And it's widely seen as a strong signal that an uptrend is tired, exhausted, and a downtrend is likely starting. It shows a shift in psychology, Buyers failed once, managed one more push for the head, but then couldn't even reach that high again for the right shoulder.
The market kind of gives up on the uptrend.
Sort of, yeah. It signals that change in direction.
And here's the really critical part for DVA right now, isn't it? That pattern's neckline, the floor connecting the lows between those peaks, it's broken.
Yes, that is the key development. The neckline support has decisively given way.
And the current weekly candle, it's clearly below that neckline, right? To the downside. It's not just poking below, it's a real break.
It is a clear, explicit break below a level that had previously held price up. That's significant.
Does a break like that usually lead to a quick move down?
Often, yes. Especially on a weekly chart, a decisive break like this significantly bumps up the probability of more downside for DVA.
Okay.
Historically, once that neckline breaks and confirms the pattern, the move towards the target can be relatively swift. And based on the pattern's measurement,
How have you measured that?
you basically measure the distance from the top of the head down to the neckline. Then you project that same distance downwards from where the neckline broke.
And for DVA, that projection point's where?
Our analysis suggests it projects the stock down towards the $190 price zone in the coming weeks.
Wow, okay. That's quite a drop from the current $127.
It is. It's not a guarantee, of course, but it's a projection based on the pattern's typical behavior. It suggests sellers are likely taking control.
And just to pile on, there's more, right? We've also seen DVA break below another important level on this weekly chart.
The 50-period exponential moving average. The 50 EMA.
Yeah, the 50 EMA, that's one a lot of traders watch, isn't it? Why is that one so important?
It really is widely watched. The 50 EMA is a key dynamic support or resistance level. Think of it as a smoothed out average price over the last 50 weeks, but it gives more weight to recent prices, so it adapts faster.
Okay.
When a stock's above it, it often acts as a floor, signaling bullishness, but when it breaks below it, like DVA has done, and stays below, that's a strong bearish signal.
So it suggests the recent trend, the momentum, has shifted downwards.
Exactly. It reinforces that potential for more downside pressure. It's another confirmation, adding weight to the head and shoulders breakdown. It's like another warning light flashing.
Okay, so let's pull these threads together. We have this powerful confluence, right? Multiple signals pointing the same way. Started with the subtle monthly RSI divergence, weakening momentum. Then, weekly, rejection from the channel top, the head and shoulders pattern forming and breaking its neckline, and now breaking below the 50 EMA too.
Great stack of signals.
Yeah. So how does combining all these pieces, instead of just looking at one, give us a more, complete picture? Does this confluence make the analysis much stronger?
Oh, absolutely. It's precisely that alignment, that confluence that makes the analysis compelling, more robust, definitely.
Right.
Look, no single indicator is perfect, markets are complex, but when you see multiple distinct bearish signals all lining up across different time frames, that paints a high probability picture.
So it strengthens the argument for that $190 target zone.
It provides a strong technical argument for anticipating that move, yes.
Yeah.
Each piece reinforces the others. If, say, the monthly RSI was still super strong or the 50 EMA held firm, you'd have doubts, right?
Sure, we can fit together.
But here, everything seems to be singing the same bearish tune. It lets you build a case based on evidence. Of course, you always need risk management. Stop losses are crucial because news can always throw a wrench in the works.
Good point. What would invalidate this bearish view?
Well, for instance, if the price suddenly rallied back above the right shoulder of that head and shoulders pattern, especially if it reclaimed the 50 EMA on the weekly chart, that would negate the immediate bearish signal.
Okay, makes sense. It's truly remarkable how these charts, when you learn the language, can tell such a detailed story.
Oh, isn't it?
We've just unpacked this powerful combination for DVA, from subtle monthly warnings to strong weekly confirmations, all pointing towards a potential shift. It really shows the market leaves clues.
It really does. And the broader point here, the utility of this kind of analysis is huge. Understanding these technical languages isn't just for pros. It's a way for anyone to get insight into how markets work, how patterns repeat, and importantly, how investor psychology gets reflected right there in the price action.
Learning to listen to what the charts are actually saying.
Exactly. Interpreting the signals the market constantly gives off, looking for those underlying shifts, not just reacting to headlines.
So as you, our listeners, reflect on this deep dive, here's a thought. How might this idea of confluence, multiple independent things pointing the same way, be a powerful tool elsewhere?
Interesting.
Not just in markets, but in evaluating any complex situation. If your car's oil light is on and the engine sounds weird and there's smoke, you probably act faster than if it was just one thing, right?
Would hope so.
So what other areas in your life might benefit from looking for these kinds of multifaceted confirmations before making a call? The market's just one big story unfolding, always leaving clues for those looking. And connecting those clues, that's a real skill.